Hi, my name is Roger Schluter. This video is about SBA 7A loans. Really, the 7A loan, I've said before, is a workhorse of the SBA. And there is a lot of offshoots off of the 7A program. This is about the main program. Um, the maximum amount that you can borrow is $5 million. I think a lot of people, $5 million is a lot of money. To some banks or some businesses, it is not. But usually, when you can do a loan for more than $5 million, usually you don't qualify for SBA anyway. SBA guarantees, they guarantee up to 75%. They can go up to, and that actually is the max exposure they have is 75% of the loan, which would be 3.75 million. Maturity in terms of an SBA loan. The maturity is if you're getting real estate, it's 25 years. If you're getting equipment, it's 10 years. And then if you're doing like inventory or working capital, it's actually 10 years also. A lot of banks don't like lending the 10 years on working capital or inventory. So it's hard to get them to. Now they can do a 7-year loan, but the max is the 10 years for the working capital inventory, max for the equipment is 10 years, and max for real estate is 25 years. You can do a blended rate. Let's say you have real estate, you've got some equipment, and then you want some working capital. You can do a blended rate where they actually take the percentage of each of those, and then they times it by the if you got real estate, they times it by the 20. They times the percentage times the 25 years. For equipment, the percentage of that loan times the 10 years, and then so forth. And then they go ahead and add those up, and that's how they get the blended rate. Interest rates. The 7A program, the interest rates are usually, it is actually a 2.75 over prime for most of the loans. For loans of 50,000 and above, the rate is, if it's under 7 years, most banks, usually you're not going to do under 7 years if you're doing an SBA loan. You want to get the max out of it. So actually it's above 50,000 and above. If it's over 7 years, it's going to be your base rate, which is usually prime, plus 2.75, which right now, when I'm recording this video, that comes out to 6%. The rate can have a higher rate if a higher rate for the bank if the loan is under 50,000. But I mean, usually banks want to make loans for, probably if they're doing an SBA, I would say they'd make them for like 100,000 and up. The SBA does have fixed rate options, but usually the banks that do 7A loans, they will take the guaranteed portion. You have the whole loan is, let's say, 100,000. The guaranteed portion would be 75% of that. Let's take a larger amount. Let's say 500,000, and let's say 75% of that, the SBA would go ahead and guarantee that. Most of them want to take that 75% and they sell it off in the secondary market, and so therefore they get a good return. It used to be probably between 10 and 15%. I'm not sure what it is as of this recording of this video, but they get their money back, and plus they get like 10%. That's a heck of a deal. A lot of banks make a lot of money doing SBA loans and selling them off in the secondary market. And the actual guarantee percent of SBA that the SBA guarantees the bank is going to be 75%. For loans above 150, and usually if the loan's under 150, that rate can go up to 85%. There's been times when the SBA has raised it to 90, but usually loans under 150, it's 85. Loans over that amount, it's a 75% guarantee of that loan. Fees. The fees could run the gambit. Mostly we're talking about loans of 150,000 or less. The guarantee fee is 2%, and that's the one that goes to the borrower is the one I'm talking about now. The actual fee from 150 to 700,000, the rate is 3%, and then it goes up 700,000 to $1 million, and it's really above that 700,000. What they'll do is they'll charge you the 3%, and then if it's between 700 and a million, they will go ahead and add on 3.5% for the higher amount only. So, and then if it's over a million, they charge you 3.75%. For more specifics on that, you can go to SBA.gov, and they would have a lot more information on it. There are a lot of fees that are prohibited by SBA. Banks will try to charge a lot of fees, but most of the fees that the banks charge are not eligible. They are not eligible fees. The main fee that the bank charges, which is an eligible fee, is a packaging fee. The packaging fee, if it's above 2,500, usually they have to itemize. So most banks are people who are hired to do the packaging will usually keep it at 2,500. They usually won't go over that. There's a lot of people that'll do it for cheaper. They also have a percentage that they can do. And that percentage basis on the SBA loan, if that percent in dollar terms get to be up to $30,000, they kind of cap it at that. So if you're charging a percent, you can't really go over the $30,000 in the fees. I know fees are touchy subjects. Usually in the SBA authorization, they will have that fee on the first page in the middle of the first page. There also are prepayment fees with the SBA, and they are a first year 5%, second year 3%, third year 1%. And this is a prepayment fee. But it's only the first 3 years. I would hope that you would at least keep the loan for the first 3 years. So anyway, that's the prepayment fee a lot of people forget about. Eligibility, you do have to be a for-profit company. You cannot be a not-for-profit. And then also you have to do business in the United States and territories. You can actually be a franchise, and franchises are, usually if they are accepted by SBA, they are the SBA has a franchise list that you can go by to see if that is in it. The SBA actually looks for certain things to deny a franchise, and it's usually when the franchise has more control than they think they should have. So SBA usually looks at their documents to decide that. There are some other rules for some other types. Besides franchises, there also is a change of ownership. An SBA can make loans to aliens. You do not have to be a U.S. citizen, and those have special rules on them also. There are ineligible businesses. Some of those would be gambling. It would be if it's an illegal activity, if you package loans, and a few others. So anyway, there is things that are ineligible, but most businesses are eligible, especially for the 7A loan. That's a good wrap up of the 7A. I'm sure there's a lot of specifics. If you get somebody who looks at this that really does SBA loans every day, they're going to say, hey, Rod, you might have left out a few things. That's kind of the boilerplate. Most banks that you go to will know what the rules are, and they will know exactly how to do these. Most of them will also sell off that guarantee. So if you think you're going to get a fixed rate with an SBA 7A, I really doubt it. Most banks only do variable rate because it has to be a variable rate to be able to get sold on the secondary market. So anyway, thank you very much. If you get value in this, please like the video. If you want to see more content like this, please subscribe. And I will see you in the next video. Thank you very much.